What is up, YouTube? What is up, guys? Welcome back to another post-trading analysis video. And man, oh man, I think today has been one of the most insane days regarding Wyckoff setups appearing in a single day. Like, I wasn't that active behind my PC the entire day, still on vacation. Girl is here, so spending some time with her at the beach, and I had some time in the morning. That's when I managed to catch a trade on Pepe, which I'm about to share with you guys. But overall, there were so many setups, it's not even funny. And we're going to talk about all of them, okay? And I really just want to give you guys a view into my thought process while analyzing the charts, because I went behind the charts and I pressed record. I scanned some things on my phone, but we're really just going to start from scratch here and talk about how I would have approached it if I managed to be active all day and sit behind my PC, because I swear to God, today you could have made like 2 weeks worth of gains in a single day. So having Bitcoin on my chart, this is kind of what I had from a macro look. We have been wicking the low over and over again, finally having that demand mitigation on that last deviation. And that's why I also think that high time frame up from here makes the most sense. Like, it would be just too easy to have yet again a lower low. Like, this low was caused by such a massive volatility spike on the VIX chart that I don't think this low is going to get taken. And from here, a higher low for a higher high would make sense. And in that way, you can kind of look at this from a local Wyckoff Model 2 perspective, right? Where we just had that demand mitigation right here. This is your little demand zone that just got mitigated. So it is a valid Wyckoff Model 2 if we do go up from here. So that's kind of the vibe that I'm having looking at this chart. I'm locally just looking at signs of strength in this area because I'm expecting a higher low on the macro view, okay? Macro time frame. So what we had, zooming in on the 4 hour, is that basically our most important market structure from the low up is this higher low and this higher high, okay? This higher low and this higher high, and then from there we had that range formation, okay? This was the range I was watching all day, just like this, where you have your 4 hour range high and you have your 4 hour range low, okay? This was my TA on Bitcoin going into the day. Now, obviously, we're checking for some price action in here, and this is actually where we see that, that range demand that got perfectly mitigated. So what I'm doing right there is I'm just checking, I'm checking the last few down candles before having that V-shaped recovery up, leaving in fair value gap right here, an imbalance. And that will be my my demand zone. This sell to buy with that imbalance above. So that's my demand zone, and then price, came towards the range low, and then deviated, tapping into that demand zone, and then from there we're going up. Now, mind you, it is a pretty aggressive deviation so far. Like, it is very steep, I would say. Normally, I would prefer for it to just be a wick. Now it's like really just a single candle down. But as we can see on the higher time frame, this is also an 18-hour range because we have the 2 candles going down and we have the 2 candles going up right here. So it is an 18-hour range. Also around 12. Yeah, I'm going to just call it 12. It kind of looks clean, right? So it is a higher time frame range. And, the point I'm trying to make here is that on a higher time frame, you do have a candle close, like a wick, okay? So we tapped into some important demand, and this could be a potential macro low, okay? So now I'm checking also in the range where are zones of rejections, POIs of rejection. Obviously, we had this local range right here that on the 2 hour, you see this nice little order block that will pull up towards that wick. There you go, up towards that wick. And then we got our supply zone right here. And then we also have a supply zone right here on the 2 hour time frame. Again, that last up candle before leaving an expansion towards the downside with an imbalance for a value gap below there. Nice little supply zones. So that's kind of what I'm watching. I have my range. I have my range starting points. I have a supply zone right here. And we just had that deviation. Mind you, it is a pretty steep deviation. So that maybe we start to leave this range, because it's really just, you want your range to really be horizontal, okay? It needs to be horizontal. And if you look at this, because of this steep deviation, it kind of looks more like it's just like trending down a bit, okay? Like you would preferably just want, you know, a bit more price action like this, and then grab it once, grab it twice, you know? That's kind of what you want to see, and this kind of looks more trendy. So it kind of puts a question mark on the range. But for now, I'll just keep it on there because we don't know what's going to happen after the deviation. Coming up after tapping that demand zone, we have a little uptrend right here. So we have higher lows and higher highs, as you can see. Higher lows and higher highs starting from the demand mitigation. So that's important market structure, because if we lose that market structure, right, if we lose that low and we break it, we could have that rotation back towards that range low, because the low failed to do anything special. Okay, just gave a relief rally for a lower bounce. Now we're locally in an uptrend from that bounce, so we pull our range from top to bottom, and this is where your first Wyckoff appeared on the Bitcoin chart. Okay, this is where your first Wyckoff appeared, where you have your range high, you have your range low. It is already a steep mitigation, right? It is already a steep mitigation. So maybe we're going to come towards that low and we don't get acceptance back inside. So it is at a crucial area. And then we see deviation 1. Oh, wrong 2, guys. We see deviation 1 right here. We extend it towards our new deviation high. And then we see deviation 2 right there, indicating for a Wyckoff Model 1 distribution. Now, how do we confirm it? Okay, what's the lowest point between tab 2 and tab 3? This is your tab 1, tab 1, tab 2, tab 3. This is the lowest point. Let's go on the lower time frame to confirm that break of structure. On the lower time frame, you have higher low and higher high, just like this. And right here is your market structure low. Again, guys, for questions about how I put a market structure, how I put ranges, how I look at deviations, I have 2 Wyckoff tutorials, part 1 and part 2, so I suggest you watch those, okay? Now, what's even more interesting about this range, which I don't think many of you guys paid attention to, the reason why this move is so aggressive right here is because if you look at this range, it is a valid range and it is a valid Wyckoff, right? But if you just look at the range in general, all the price action is in the upper section of the range, and there's barely any price action in the discount section of the range, right? And whenever you have that, you have an imbalanced range. And how you can confirm this is by pulling your fixed range volume profile. And what this will tell you is the volume in this range. Obviously, all the volume is in the upper section of the range, and almost no volume is in the lower section, because all the price action is in the upper section of the range. So this is a little extra confirmation that I like to use of like, okay, also the range is imbalanced and price loves to fill imbalances. So what you could have done is you could have entered on the break right here, put your stop loss above the high, and then obviously you target the low. And what you're expecting is you're expecting it to be a fast move. Now, what did price do? After the break, we started coming down, started wicking the low, and we had this move up. Now, why did this move up happen, guys? You have to ask yourself this. You want to analyze every single move and ask yourself, but why did this happen? Why did price have to do this before dumping down? These are the questions I want you to ask yourself. And I want you to answer those questions using liquidity or supply and demand. Because if we flicker through the time frames, did it have a reason to? Well, look at this. Look at this little 3-minute order block waiting at the top where the third tab of the Wyckoff distribution is, kind of making it a market maker order block. Look at that. Perfect mitigation. And also on the 10-minute, there was actually also a 10-minute supply zone, a 10-minute order block. So you could have saw this 10-minute order block and tell yourself, okay, you know, price has a reason to come higher. It has a reason just to mitigate that supply before going lower. Now, not always does it happen that price gives the retest. That is why we enter on the break. But you shouldn't be scared on a move like this because it has a reason to come higher. Now, if it wants to fulfill that reason, that's up to the market maker, right? So in this case, it did. But when you see this pump, I want you to not get stressed about you getting stopped out. No, our stop loss is above that high and we target the low. And the reason why this was such an aggressive mitigation is because there was nothing here. There was nothing to hold price up. Yes, you have this demand zone right here, or this little range demand, little pullback before going higher, right? Little pullback before going higher. But in general, there was no volume backing up your demand. So why would price bounce there? You know, it just smashed through it. So this is a lovely little Wyckoff Model 1 distribution, entering on the break for around a nice 2.5% gain. There you go. Nice 2.5% gain. 2.6, okay? And then what you could have done after you mitigated the supply and you broke that low again, you could have moved your stop loss from above the third tap high towards that high. Because now, since that supply has been mitigated, there's no reason for price to come lower again because supply has been mitigated, right? So that's where you control your stop loss and de-risk yourself a little bit. So lovely Model 1 distribution. But now, guys, now I want you to pay attention to how price behaved after tapping its target. Because price came down fairly aggressively. But then it also had a massive V-shaped recovery, right? Had a massive V-shaped recovery. Ask yourself, really ask yourself, why is it behaving like this? And think from a market maker perspective. Why is price behaving like this? Why is it moving down and then moving up so aggressively immediately? Okay, we just had a distribution. That's done. We got the move down. But instead of getting any follow through, we had this V-shaped recovery. And look at that. If I just follow my market structure here on the lower time frame, we can clearly see that this was the most recent sell to buy, leaving an imbalance on the 1 minute or on the 3 minute. So this right here, this sell to buy, leaving a fair value gap, that's a little range demand. So we have demand remaining below our range low. And instead of this distribution having follow through and price coming back all the way to this low, like we just described in the beginning, it got this massive V-shaped recovery. So if I ask you the question, if I give you two scenarios, okay, what do you think is the right one in this situation? If I tell you, oh, the market maker's intention was to fill the distribution and then dump price back towards this low, okay? Or what if I told you that the sole purpose of this distribution was to mitigate demand to go higher? If you see this V-shaped recovery, and I ask you, what was the purpose of this distribution? To have any follow through or to tap demand to turn into an accumulation? What are you going to say? Obviously, you're going to say accumulation because look at the V-shaped recovery after tapping demand, okay? So ask yourself why price is behaving like this. Why would they want this to happen? We had the distribution, it filled an imbalance, it tapped demand, and we got a V-shaped recovery. We just deviated the macro range low, so maybe price can come back inside more. Maybe this distribution can go over into an accumulation, right? Because now you have no distribution anymore because you touched the high again. So this is a 4 tap. Even if I zoom out, guys, even if I zoom out, this will stay a 4 tap, okay? Even on the 45, like this range is valid on the this range is valid on the 30. Even on the 30, you have valid structure here. Boom. This is valid structure. So this is truly a 4 tap. You cannot make like a low time frame schematic going over in a high time frame schematic. This is a 4 tap, okay? AKA this is no distribution anymore. What did price do? We wicked the low. It went over into a potential accumulation because look at the V-shaped recovery after tapping demand. Obviously, after tapping demand with this V-shaped recovery, the sole purpose of the distribution was not to have any follow through. No, it was to fill long positions to turn it into an accumulation. So now that you know this, because you have asked yourself truly, why is it behaving the way it is? Oh, well, maybe they want to turn it into an accumulation. Now you just have to watch for a Model 1 or a Model 2, right? That's the only thing you have to watch for. Now, looking at the Model 1, okay, okay, you know, what is our extreme liquidity or do we have extreme demand? Well, right here, I can see these last two candles coming down before pumping higher, okay? making this your demand, leaving this tiny imbalance right here. Tiny imbalance above, this is your demand zone, okay? So if price mitigates this demand zone or even takes out this low, because people always or oftentimes ask me, how do I find extreme liquidity? It's not every single time, but it's not every single time, but oftentimes it's just your first market structure pool. So on a 1 minute, this is more like a 30-second structure, but it looks clean on the one. So for liquidity, you can use it. This is your first structure pool, and then this is your second pool, right? And oftentimes that first low, after deviating, that becomes your liquidity target for extreme liquidity, okay? So you grab extreme liquidity, you tap demand. So this could be a model 2, right? But there are a few things that I don't like about calling this the model 2. First of all, we had a very aggressive move towards the downside, and we didn't have that much liquidity at the top. So does price really have a reason to have a sell or have a buy, have a sell, and then another buy again? Because you have some liquidity here, but it's not much, okay? It's not that much. It's not that significant. Now, either way, you have to confirm a distribution by breaking structure back to bullish. Or you have to confirm an accumulation by breaking structure back to bullish. But your accumulation high to break is all the way up here, right? Your accumulation high is all the way up there, which is pretty high up, okay? Pretty high up. Even if you refined it down into your most local pool right here, you have to wait for that high, right? You can make this a red structure drawing. You're just dissecting the market structure into more market structure. So even if you waited for this high to break, that would still be too high. So the market structure break is very high. We had to buy, we had to sell. Are we really going to have another buy again? At that point in time, I wouldn't be completely sure about it. But, we also didn't get the confirmation because instead of breaking the high, you started rejecting from supply, okay? Started rejecting from supply instead of breaking the high right here. So what happened after that is very key because as we know, structure is trending down. In a downtrend, you pull your range from bottom to top, just like this. Okay, so now, hey, we took that low one more time, and now things can get very interesting, very, very, very interesting, because that would mean that potentially this becomes your Model 2 accumulation schematic, because if you take that low one more time, obviously this becomes the extreme liquidity. So again, it fulfills the third tap's purpose of grabbing extreme liquidity, okay? But now you not only have a potential Model 2 accumulation, you also have a local range here where this can be the 1. So what you have to do to confirm this 1, 2, and 3, you have to wait for structure to break back to bullish, right? So your black structure drawing, that's the main one. We're going to turn this into black. That high is all the way up there, right? That's useless. But we can dissect it further like we just did in that last leg right here. And that's when you get this. This is your red structure drawn, right? And that breaks back to bullish all the way up here, which is very close, right? So you have your 1, you have your 2, and now you have your 3. And that's the new 3. This could have been your 3, but it got never confirmed. So you just waited. You just wait. And then this can be your second 3. But look at how price came down. Look at how price came down. Now, by the way price was coming down, you have this high, you have this high, you have this high, this high, this high. Now you have a trail of liquidity. Now you actually have a reason to pump because you left behind so much buy-side liquidity, right? Let me double tap that. So now you actually have a trail of liquidity. And if I extend this to the right, there you go. Boom. Ignore the tops at the top because we know there's no valid distribution anymore. Let's just extend this. Boom. Boom. Look at this. Now you have a beauty of an accumulation. And we were already looking for that accumulation because of the V-shaped price behavior right there prior to it happening. You had the distribution. It didn't have any follow-through, but it had a V-shaped recovery. And then price slowly made its way down, tapping and giving us that third tap. But the extra confluence here, like I just described, is that not only that we have a Model 2 accumulation on this time frame, your third tap, okay, so this is your tap 1, this is your tap 2, this is your tap 3. Your third tap, guys, also had its own range, like I just pulled right here. It had its own range, where this is your range low, that's your range high. Let's ignore this bigger equilibrium. There you go. And you have a 1, you have a 2, and you have a 3. So it's double the confluence, right? It's Wyckoff within Wyckoff, which is something I went over into my advanced Wyckoff tutorial. Wyckoff within Wyckoff, and it's always an extra confluence, right? But you see that if you were patient, not even if you were patient, if you're just waiting for your confirmations, you know, you could have seen that a range was going to be created, and you know, you had that Model 2 accumulation schematic in the key area on the chart. So it's very nice. You had this Model 1 distribution. It was an aggressive move towards the downside because the range was imbalanced. From there, you have to ask yourself, is this range or is this distribution going to have any follow through? Yes or no? Well, you got the V-shaped recovery, and you know distributions can go over into accumulations. Given the bigger context of the range, we just deviate the macro range low, tapping into high time frame demand. So distribution into an accumulation could make a lot of sense. Then you just have to wait for your, if you just waited for your confirmation of a Model 1 or a Model 2, you would have seen that the confirmation was right here, and you would have also seen that it was an accumulation and a Wyckoff within a Wyckoff. And then this would have been an easy entry right on this break. Put your stop loss below the low, and you target up towards that high for a nice 2.89% gain. But as I said earlier, this can go higher. So you could have left like 25 to 30% running, because it did end up going all the way to 5.5 risk to reward. Because there was no distribution anymore, guys. The market makers that had this distribution, the sole purpose of that distribution was to fill more longs and go higher, okay? Because the range broke towards the upside. But you could have already made that conclusion by this V-shaped recovery. This V-shaped recovery, guys, is very, very, very key. So that was Bitcoin. So if you just traded this nicely, you had like a 2.6 RR here and almost a 3 RR here. So that was like a 5+% gain on Bitcoin alone, okay? On Bitcoin alone. Now, going into gold, man, gold is pumping, guys. And before I go into the lower time frame, let me tell you one thing. Whenever you see a distribution like this failing, a macro distribution, that's bullish, okay? If you see a distribution failing, if it doesn't turn into a macro bearish PO3 where something like this happens, where you have your range and then you have your PO3 schematic that's forming right now, where this is just manipulation before, you know, rugging it back inside, this could very much happen. But if this PO3 fails and you have this distribution that obviously then also fails, that's bullish, okay? You can expect way higher prices. But going on a lower time frame and picking up where we left off yesterday, okay? Yesterday, I told you guys about the short I took right here, okay? With this liquidity trail, took the short, took it to the low. I was holding 25% in that short, like I said yesterday. But, we were following structure here, okay? And we were talking about, okay, this is a break of structure. Expectational order flow is lower high for lower low. But what happened? Is this a lower low? Are we expecting after this low a lower high for a lower low? Of course not, guys. Of course not. Why? Because we didn't close below it, so it was never a break of structure. If I told you, is this a break of structure? Obviously, you guys have to say no, because it is a wick, and a wick is not a break of structure. What happened here is we wicked the low, and we tapped into demand, and we got a very, very, very strong bounce from it. So no, we're not expecting a lower high for a lower low. Low-key, what we're expecting is price to take out that high again. Why? Well, the job of this high is to break the low. That's the purpose of the high. It failed to break the low. It failed to break the low. And then it becomes weak, and price can have a rotation back towards that high. Okay? So no, we're not expecting a lower high for a lower low because we had an SFP. So what we do is we follow structure like we always do, guys. We always follow structure. So from the low up, we have a higher low and a higher high. And see how I'm always always using the most local and the most important market structure pools for a trade. Like it didn't matter what happened here because we already got this massive move down. The most important move now is to follow this structure from the low up because that will give us trades, okay? So we're trending up, okay? We're trending up. Obviously, in the uptrend, we pull our range from top to bottom, and that's where we get this, our range, okay? Now, mind you guys, just by the fact that this low failed, or this high failed to break that low, and we could have a rotation back up towards that high, bro, what is stopping that from price taking the all-time high? Like, there's nothing, you know? This, like I said yesterday, it needs to have follow through eventually. Otherwise, you're just pushing it. So by price wicking this low and closing bullish, that is the key indicator of, you know what? This is probably not going to do shit, okay? And it's probably going higher. Now, what happened from there? Price formed the range, okay? Price formed the range. And we have our range high, and we have our range low, okay? It got its deviation. Let's turn on that marker session. Got its deviation around New York PM. It is a bigger deviation. You know, it spent some time above, but it came back nicely. Yeah, you can see the buy to sell. Okay, you can see the buy to sell. Now, we need to check, okay, can we have a model 1? Can we have a model 2? What is extreme supply? What is extreme liquidity? Right here, let's say right from this low, you get this last pull up before coming down. That will be your supply zone. That's the supply zone that got mitigated. Like, I'm just using that last downwards candle here, like the last downwards candle before going up, and then clearly here sellers took over and pushed price down. So that last candle that went down before, you know, having that kind of deviation above, that's my supply zone. It just missed here. It just missed there. So that was my supply zone. And then obviously during Asia, it tapped into it. So this was a valid third tap. Now, it was harder to find an entry here because your structure low was all the way down here. And you didn't even break that. So you could have found an entry on the reconfirmation here. But in general, it was harder to find a good entry because the market structure was kind of sketchy, okay? But you had the distribution, and then, you know, we hit the target, which is the range low. So it did work, but I wouldn't call this like a trade per se. Now, what happened from there is crucial, okay? What happened from there is absolutely key because, like I just said, guys, there is a good chance that this distribution goes over into a accumulation. Why? Well, because we're expecting higher prices because it failed to break this low. So we're not expecting a lower high. We're expecting this high to get taken. So if you form a range and we're expecting the high to be taken, obviously I'm checking for a accumulation as well. So we had this distribution, right? Had distribution hit the target. And we can keep it here. Looks nicer, right? Has the distribution hit its target? Kind of get that strong deviation towards the downside. But you have to ask yourself, okay? You have to ask yourself, again, okay, this could be a model 2, and we're having such a strong deviation. Like, is there a reason why it is such a strong deviation? If there's no reason for it to be a strong deviation, why was it a strong deviation? Maybe it was just a range break. Again, for an answer, you look at it from a supply and demand perspective or a liquidity perspective. Well, if I check what's here on the left, well, would you look at that? This little 1 minute order block. This 1 minute order block was all the way down there. And what did price do? It mitigated that. So was there a reason for price to come this deep? Yes, because it wanted to mitigate this demand zone. So now you're chilling. Okay, it had a reason to come this deep. There was demand. Again, now we check for what is our extreme liquidity. I tell you guys earlier in the video, oftentimes it's just your first market structure pool. So on like around the 3 to 5 minute, this is your first market structure pool, making that first low your liquidity target. Oftentimes, this is just how I use it, guys. This is just how I use it, that first market structure pool. This is your extreme liquidity. What did I tell you guys yesterday as well? Well, timing in the markets. Because what happened is that if I stay on the 3 minute, look at that. Asia pushed us down, deviated it. So the Asia market makers did their thing, Price came back up, it came down. London opened right here in this blue area. It pushed it down, it grabbed these after hour lows, and then we reversed. So the moment we took those lows, this could be a valid third tap. Now you just have to wait for your market structure break back to bullish, which was right here. Again, going over that faster because I have all those tutorials online. Enter here, stop loss below your third tap low as usual. And then, guys, no, I'm not targeting the range high. Why would I target the range high when I'm expecting this high to be taken? I'm at least taking it to here. And then low-key, I'm expecting this distribution, macro distribution, to fail. So leave a runner. Leave a runner, guys. This ran up all the way to 14 risk to reward. That is absolutely nuts. But I would have taken a take profit above this high right here. And then let's say I would have taken a 70% TP at that high. And then just leave the rest run. Like, let it run. Run, Barry, run. For my people that have seen the flash. But, you know, it's very key again that price failed to take out this low. So we were expecting this high to be taken. So this distribution could easily go over into accumulation. And it did. And the timing was perfect. So it was an easy trade. Okay. So I hope everyone banked of this one. And I think Trader Kel, if you're listening, he was looking at this and he fell asleep. So he couldn't take it, unfortunately. Like, guys, I feel bad for all the people that are not in the UK hours. I'm European, of course, so I am. But London sessions tend to get crazy in Q4. So you better change your sleeping schedule because I'm going to be trading London and you do not want to get left behind. But yeah, if you ask, yo, why is this move so aggressive? We had the accumulation. Price fell to take out that low, hitting demand. And we reversed from there. Very nice. Very nice trades on gold. 2 trades on Bitcoin, 2 trades on gold. Now, the beauty of the day. Pepe, okay? This is the one that I did take. What was the timing? Like 9, right? Yeah, it was around 9. And then this gold trade was around 9:30. Yeah, I wasn't online anymore. And this Bitcoin trade was 12 and this was 6. Yeah. No, I was behind my PC around 8, 9. So, that sucks. I should have watched gold closure because it just came after 9. Yeah. Okay. Now, going over Pepe. Okay, going over Pepe. We built context yesterday, but it was mainly just the fact that this is a very important market structure low. This is a very important market structure low. Preferably, we do not want to lose it. And it looks like we're losing it at the moment, right? But we do not want to lose that. And we had this demand chain backing us up, right? We had this 45-minute demand chain. What do I mean with a demand chain? I basically just mean that this demand, this 45-minute order block created this 45-minute order block. And then you kind of have like a chain going on where this demand created that demand. And typically, it gives for nice bounces, okay? Typically, it gives for nice bounces. And what happened from there, instead of bouncing from it, we filled this block by, I think, like 95%. Kind of already indicating that the block is not that strong. Like, I would have preferred for a demand chain to bounce from the top. And we kind of filled it all the way. So I was like, ooh, I think we can take this low as well because we came so close. Like, now you have like equal lows, okay? And crypto loves to take equal lows. So I was kind of like, okay, I'm not expecting a bounce here anytime soon. So what I did is I was checking this price action, okay? And you have to pretend it's 8 in the morning right here. Right here. Boom. I get behind my PC, okay? I'm checking price action. I was expecting a bounce from the upper section of the block. We didn't get that. We filled it. Now we have equal lows. So I'm kind of expecting these equal lows to be taken. Again, we're getting the move up. I always watch the most recent expansion leg on the mid time frame. So on the 5-minute, we have a higher low and a higher high like this. So obviously, when I wake up right here, I'm pulling this range, okay? I'm pulling this range because maybe we have a local distribution to take towards that range low. So I have my range high, I have my range low. And within this range, we had this trail of liquidity right here. We had this trail of liquidity. But not only do we have liquidity inside of the range, we also had liquidity all the way up here from these highs, these bad highs during like Asia, or not Asia, like after hours, okay? It was like at 9, from 9 till like 12. Those are like bad hours, right? So we had these buy side liquidity highs above the range and within the range. So if you ask, oh, but Lars, I was scared because this move up was so aggressive. Guys, the move up was so aggressive because you had much liquidity in the range and out the range. And the sole purpose of this move up was to grab liquidity, because look at this liquidity grab, guys. Look at this liquidity grab. You have a buy to sell. So do you think the reason of this move up was to break out of the range, or the reason of this move up was to grab liquidity on the left and come back inside? Well, obviously, once you see the buy to sell, you know that the sole purpose of this move up was to grab liquidity. And again, guys, these are the questions you need to ask yourself. Really try to understand why price is behaving the way it is behaving. Now, from there, we also wick the low, so we always have to be aware of a potential accumulation, okay? But wick the high, wick the low, we grabbed a lot of buy-side liquidity, and we have these equal lows here. So I'm kind of aiming for a distribution, okay? So now I have to ask myself, okay, when is this distribution going to be valid? Like, where could my third tap potentially be? And it was a bit more ugly, but what I basically did is literally I just grabbed this up candle, literally the last up candle before moving down. Okay, so this was the last up candle before moving down. I grabbed the entire up candle towards the high, and then I put it from there. This is not the most beautiful supply, guys, but obviously it is some sort of supply, because look at the move down. Look at the buy to sell. So I just grabbed my last candle, and then that is what was mitigated. Now, if you want to refine it, this was the only candle not mitigated. The only candle not mitigated. So this was like kind of like a order block with an imbalance below, and that's also the one that got exactly mitigated. So if you want to be specific, you could have used that area, but this entire move was enough for me. Okay, now guys, we already grabbed extreme liquidity. So do I think it will be a model 1? Probably not, because there's not a liquidity target. This is not a liquidity target because this move up grabbed all liquidity, not becoming liquidity itself. So I was just waiting for a 1 minute market structure break, to confirm the distribution, guys. Guys, sometimes it's so simple, it's like scary. Like, trading becomes boring. I was just waiting for the break, and I entered on that 1 minute break, and then I put my stop above the high, and then I targeted the low. And not even this low, right? I took a tiny TP at that low, but as I said, we had these equal lows here, and this 95% mitigation of the order block kind of was indicating that the order block was failing, so I was aiming towards that low. Now, from there, we can deviate that low. I don't know at the time, okay? But it's already a 6.4% gain on the account, so it's just absolutely lovely. And then we had the Model 2 distribution. There was also no need to stress for this turning into an accumulation, because you never broke any structure back to bullish, okay? Your structure was pointing down. You deviate the low, and then literally right here, you even got a reconfirmation of going short. You broke it again. You broke this local uptrend again. So lovely Model 2 distribution trade, and absolute banger, absolutely spot on, okay? What I'm seeing right now is actually another distribution, but it's not really the right time to trade. But like I just said, it looks like we're losing that low, right? So I would just follow my main market structure pool, like 45, yeah. So let's say we use our swing structure, so it's kind of pointing down. It did break back to bullish here, so maybe it will put in a higher low for a higher high. But we're at this area on the chart where, okay, we did grab liquidity on the left here. We did grab these lows on this move. So maybe we'll get the higher low for the higher high. I don't know. But all I'm seeing is that if we follow this uptrend, you kind of have another distribution. So what I mean with that is, okay, you broke it up. You broke it back to bullish. But on the 3 minute, you got this. Look at that. Uptrend, high to low. Range high, range low, deviation 1, deviation 2. Indicating a Wyckoff Model 1 distribution. You have these. This finishes. This is like the cherry on top, guys. Like, this is amazing. Look at all these lows. Every low did not take out the previous one. Massive, 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 massive trail of liquidity. only stop losses, and look at that. Did you get a confirmation? Oh, you did. You did. This is valid structure. There you go. Break of structure. What if you entered on the break? Put your stop above the high. Target the low. Not the best risk to reward, but hey, it's a free 1.38%. So who doesn't want to take that, you know? Absolutely beautiful. Absolutely beautiful, guys. So I didn't take this because I was at the gym, actually. But yeah, coming back to this trade, this buy to sell, the same way you had to buy to sell on Bitcoin after having the distribution, right? And tapping into demand and fulfilling this distribution target, or this sell to buy, I mean. So this sell to buy, okay, is very obvious. This sell to buy indicated that this accumulation could take place. And right here, this buy to sell indicated that the distribution could take place. It's the other way around, okay? So knowing that, it already gives you a way clearer view of where price action is going. I'm not just grabbing random points on the charts where I pull my ranges from and I check for a deviation 1 and I check for a deviation 2. No, I'm searching for a reason behind why price is moving and behaving the way it is. And this is something that will come with experience, guys. This is only experience and putting the hours behind the chart. And a lot of people ask me how they can practice best. Guys, the way you can practice the best is you go back in time to I have 4 months of post-trading analysis. You maybe know me for like 3 weeks, but I've been doing this for 4 months publicly. I was just less known, but I had the exact same skill. So what you can do is you can go back in time and you can check a post-trading analysis video of mine. And you can check over which trades I went and on which asset and on which pair, okay? Then what you do for that specific day, because I always put the date behind it, for that specific day, you go backtest yourself. You go trade yourself for that day. And then you note down the trades that you took and the way you were viewing the charts. And then after you are finished trading that day, you go back and you watch me trade that day and explain my thoughts. And then take notes of what I was thinking and how I was viewing the market compared to your views at the time. And when you do that for 4 months straight, you will be on the exact same brain level as me, like the exact same wavelength. Like we will be thinking the same thing. So that's the best way you can practice. I go over all these trades that I take and also trades that I see but didn't take because I had no time or I missed it or you name it. And then you go backtest yourself and you watch me afterwards. That's the best way to learn. Okay, best way to learn. I don't know if there were setups on Sol. Yeah, okay. So talking about Sol real quick, a lot of people tagged me in this post, right? And they drew their range like this. This is how they had their range. Guys, why would I like this range? Why would I like this range? This is your range high, that's your range low. You immediately break out of the range. I would never use this. I would pull my market structure as a higher low and a higher high, and then I'll wait for my new range. And then obviously you didn't get that new range on the 4-hour time frame, okay? On the 4-hour time frame from the top down, you just started downtrending. So what do we do in a downtrend, guys? What do we do in a downtrend? Let's make that black. We pull our range from bottom to top. So this is the most important range I had on my chart. This is the only range I had. And then I was watching for a short. So I have my range low right here. I have my range high right there. And these were my starting points, right? These were my starting points. And then right here, I had this curvature. Boom, curvature of liquidity. And then we deviated it, but we never got the third tap, right? So I was watching for a distribution here, but it was like a 1 and a 2, and then it already hit its target. So that was unfortunate. And from there, we just kind of started breaking the low, and now we're trending down. But this is the range I was watching, guys. Like, isn't this way cleaner, this range with this deviation and this trail of liquidity, than this entire range? Like, it looks so ugly, no? It looks so ugly. This is what I want to see. You want to have your range low. You want to have your range high. And these are the deviations I want to see, guys. It doesn't have to be a wick, but at least a candle close that immediately comes back inside. Right here, if this was your starting points of your range, look at this price action above it. That's not nice. This is what you want to see. Compare the difference. Your 1 And then this is the deviation compared to this deviation. This is what you want to see, not this, okay? And also look at this build up. You're building up coming into that high, okay? You're building up coming into that high. Right here, you just have like a massive pump and pump. There's no slow build up, right? So that's why I would never use that high, guys. And yeah, that was kind of it for today. A 45-minute video. I think that's more than enough. Oh, one last thing about Ethereum. We had this Model 1 distribution. I'm still in that trade. What I did, though, is we got this liquidity grab right here, indicating this could turn into a Model 2. And we actually got the confirmation as well. So we broke structure back to bullish. And the only thing I did is I hedged. I hedged my position, okay? So let's say my position size on the short was 10 grand. I opened a 10K long here. So if I get stopped out, I lose no money because I have a 10K short as well. So it evens out, okay? So I took a long here and then put my stop below the low as a hedge. But obviously, the Model 2 is less good as the Model 1. Why? Because look at all these lows. Look at all these liquidity lows here for the Model 1. You have all these lows to be taken. All these lows, okay? It has a nice build-up. Right here is like V-shapery. So you only have inefficiency. You have many supply zones. And if you do come up here, you have to watch out that it doesn't turn into like a bigger 2 where you have your 1, your 2, your 3. And this is that lower high, turning where your Wyckoffs flow over into each other, right? Your Model 1 into Model 2. So there's way more resistance in this Model 2 while going up, making it less good. The less resistance there is, the better your Wyckoff, obviously. So what happened from there is I opened a long position, and then that's still going. Like I told Tim, if you're watching this, I told you to put your stop loss to break even. Yes, that's the right way to do it. I am just hedged. Like I don't care about the position, okay? But if I was opening a long, I would have followed my structure, okay? I would have followed my structure like this. And then the moment we had that next higher low for the higher high, I would have trilled it to here, which was basically your entry. And then price, kind of didn't even mitigate supply, came down. Kind of had like a 1, 2, and a 3 here, some sort of accumulation. But low-key, we're just forming a new range in here. And my charts are getting messy, so that's a sign that we need to stop. But yeah, you had 2 trades on Bitcoin that could have netted you over 5%. You had 2 trades on gold where only I would have taken the long, but you could have a 10 RR on that long easily. So that's 15 RR. Then we had a 6.5 RR trade on Pepe, okay, which brings the total to almost 20 plus risk to reward. And then we had a potential trade on Ethereum that got stopped at break even. So those were the setups. So 20 RR. Like I said, I aim for 10% a week. So that would be 2 weeks worth of gains. So the prediction in the beginning was amazingly. And guys, I've seen a lot of people talking about, hey, why don't you start a Discord? Why don't you start a community or a Telegram where we can all just post ideas and setups? Guys, you don't even know. You don't even know what I am building. I'm building something so insane. You guys are all going to make it. The people listening to this last second of this video, waiting for gems coming out of my mouth, talking about the charts, okay? Guys, I'm working on something. Give me some time. It will be nuts. I am just not the biggest tech guy, and I don't understand how all these servers work. So I need some help with that, but I'm building and changing the game regarding educational platforms. Okay, so just wait. It's emotion, and from now you can just always text me in private, right? So just tag me in anything, and I'm replying to every single one of you on Twitter. It takes me a lot of time. It also takes me a lot of time to talk about these videos, guys, because I just took a Pepe trade, but I went over everything for you. Always makes me better, but if you appreciate the work I'm putting in for you guys, kind of changing the trading space, just leave a like, tag me in some stuff, shout me out, give me some credits, and I see all your guys' posts, and I love seeing you guys win. So love you guys. That's it for me. Hope you enjoy your weekend. Take some time off on Saturday. Come back fresh on Sunday. See you guys Sunday. Peace out.